Good morning, all. This is Trader72. Welcome back to my YouTube channel, and I hope you are all well on this fine morning. It's sunny and lovely in London, and I'm about to go and play a bit of game of golf in about a couple of hours. So I think I'm going to enjoy the weather a little bit, but I will be keeping an eye on the market because it has been turbulent indeed, full of ups and downs, less ups than downs, or maybe some ups on certain situations such as oil, and less of the down. And as you all know, I am down like a bear on oil at the moment. Not quite worked out as such, but then we'll come back to that in a minute. Like I said, it's been an eventful 2 days. I've just done a few deep analysis on a few stocks to buy that I feel are value investing opportunities, and not done the daily shows. So I am back doing this one because I think there's been enough happening for me to catch up with you guys in terms of what's been happening. Some of you will be well documented, so I'm not going to go into a deep dive into what's going on. I think I'm just going to oversee and over highlight again some of the issues that we're going through at the moment, which are obviously concerning for any retail investor, as much as even the big investors, I would assume, at the moment. We are deep in the red, or we were certainly deep in the red yesterday in all sectors and markets. So without further ado, let's start this off really with the main headlines of the last 24 hours. And as you can see this morning, oil and gas prices surge. Fed stand by their ground, and actually quite hawkish, which we didn't want to really hear, i.e. interest rate cuts, and how many will we get this year in 2026. So, let's start with the situation with the oil, because that's obviously the main geopolitical news at the moment. We have had, obviously, quite a spike in oil since yesterday. It's gone up from about 105, 106 yesterday to now $115 on crude oil specifically, which is the one I bought into. It actually even touched 118 this morning, which was feeling a little bit uncomfortable this morning when I woke up and looked at that first figure. It has since then slightly settled. So let's have a quick look before we go in deep into the headlines here. So as you will see here, crude oil is at 114. So it has settled back down, about $4 back down at the moment. So that obviously has been an issue. Now, the reasons for all this, really, let's delve into it. First of all, the headlines. Let's go for my headlines here. So we'll come back to the PPI news in a minute and the Fed reaction. As you see, oil jumped from 103 to 115. Stronger inflation, obviously causing stronger inflation, and obviously a spike in the markets. Catalyst. Now, the catalyst of that is obviously fear of supply disruption to oil. That is the main takeaway, obviously. So there was an attack from Israel recently. Let's have a quick look at the news on that side. There was obviously an attack from Israel to one of the gas stations in Iran. Let's have a quick look here. So at the same time, European gas have 24. So there's been a retaliation of that attack by Israel, by Iran, to various gas station or gas supply stations in all the Middle East, including one in Qatar. So the attack obviously has deepened the situation with supply for oil, and now we are looking at oil spikes above 115. So that's one of the main takeaways of yesterday. So I don't think, from what I can gather, and I'm gonna allegedly say this because obviously there's a lot of stuff written about all this at the moment, and there's obviously a lot of fear mongering going on. Even so, the retaliations are sporadic as far as I'm concerned from Iran. Obviously, that is popping up the news quite a bit, and I think spiking the price of oil as well with it. But as we all know, in this market, it's all about also retaliation and speculation, and etc., etc. I think the Americans were not aware of this attack by Israel to one of the main petrol station, refineries of Iran, and I think that took the Americans by surprise. Immediately on the back end of that, Iran said it would retaliate to various different Middle East countries, which it did overnight. Hence the price spiking up again. So that is obviously something that as you can see there, Iran strike hit the world's largest site, a liquefied natural gas production at Ras Laffan in Qatar. The location alone accounts for up to a fifth of the global of LNG supply. So that kind of retaliation is clearly highlighted the price of oil going up. So that, I don't think there's any further to look for that. Initially, yesterday, I actually thought it was actually on the back end of the PPI news, which I will come to in a minute. But I think the double whammy of that, plus the Fed's hawkish sound, has made the market very spiky and red and down and out market. So it's not been pleasant, let's be honest. So, President Donald Trump has denied US or Qatari involvement in the attack of South Pars. Now, this was the initial attack by the Israelis in obviously an area of Iran, saying Israel instead carried out the bombardment. The fresh strikes on energy structure in the Middle East are the latest headaches for oil markets, already grappling with the effective structuring of the Strait of Hormuz, which is still, by the way, shut down as well. So there's definitely supply issues there, and there's definitely a big issues in terms of how long will the war last, and how long can this last before, obviously, we see levels of 120 to 130 as promised by the Iranians, which I think promised initially $200 a barrel. Now, I don't think it will go, hopefully, touch wood, as far as this, but it would certainly do some damage. Now, the longer this goes on, the more the inflation goes up, the more we are going to be looking at a recession across the global world, which is the last thing we need at this moment. So this does need to be resolved by everybody concerned fairly quickly, as we're going into the fourth week of the conflict. So I think this is all a bit of a standby as we go into the weekend. Obviously, it's Thursday today. We've got one more trading day tomorrow. Obviously, my position in oil is getting squeezed. I am now obviously quite a bit down. I bought obviously initially at 92 on short, thinking that the war would eventually end. It looked like it was going towards an end of a conflict with the Americans, you know, obviously strategically killing a lot of the Iranian leaders and looking like potentially the Iranians were looking a little bit weaker. Then it popped to 102 where it settled down again. And of course, the latest news I've just mentioned has popped it up to 115. So where does it go? I'm considering buying more at some stage. Now, I am weighing my options in terms of a technical analysis on the charts, because when you do commodities, you do need to work out a good entry point. And at the moment, it looks like the oil will potentially go up another notch up because there will be, I would have thought, sporadic retaliation from Iran. And I do say the word sporadic. I don't think it's an all-out war at this stage. Now, the Americans are also considering potentially putting boots on the ground, which I think they were, well, Donald Trump promised he would never do, but it does look like he may have to speed things up, especially with the Strait of Hormuz, and try to open that up, because I think the moment we open that up in terms of ships going, you know, obviously being locked in, may help the undersupply of oil at this stage. So lots going on in the air at the moment, lots of potentials. I still don't see this conflict going out further than another maybe couple of weeks at best. And I think eventually something will have to be sorted between those countries. Now, like I said, I'm not on any side. I'm not apolitical. I'm an apolitical person. I don't want to take any side. I'm only observing on what is going on and what my feelings are. That at this rate, the war, I can't see it going on unless something catastrophic happens with, you know, between the conflict and it escalates to a point of no return. So, you know, let's take that back and take a step back. Now, the next step forward is obviously what happened with the PPI numbers yesterday, which is the producer report. Now, this is not the consumer inflation, this is the producer's inflation. This is obviously people that are factories, produce product for the consumer, and obviously with the undersupply of oil, there's been more of a demand for oil, and of course oil spike up. So it came in a lot hotter than expected yesterday. And I think it was expected at 2.1 and came in at 2.6. Which is a lot hotter. Now let's have a quick look actually what really happened yesterday, if you bear with me, because that will give you more of an idea from my calendar at the moment yesterday. There we go. So let's have a look at so PPI demand on the month to month, we came in at 0.5 above 0.2, and I think this is the big one here. The year on year final demand came in at 3.5. 2.4, well above the 2.9 and last month's 2.9. So that is quite a surprise. That is coming in hot, and that is the inflation moving up to 3.4. Now, we all know that the Feds would like the inflation to be at 2%. Clearly, it's going to take a long time. Now, the issue with oil is obviously oil is used by every single producer you can think of. This mic, the phone, everything is made of oil. So obviously there is a massive need for oil, and the minute there's an undersupply or a disruption to the supply, oil absolutely spikes. Every time there's a war in the Middle East, it will spike. So we do know how to choose our wars, and I think whether it's Ukraine, Russia, Iran, Israel, US, obviously it will involve oil supply. Like Russia obviously is a big supplier of oil, and that obviously disrupted the oil supply in 2022 when the war started, and it spiked to 122 then. So no surprise that oil is at the state it's at the moment. So the PPI news definitely compounded to this, obviously, and markets fell apart very much. I think the Dow, the S&P fell, and the Nasdaq fell by between 1.5% to 2% yesterday. So a big step back there on that side. So what will this mean? Costs are rising faster than predicted, inflation reaccelerating at the producer level. So not good news there indeed. So really a double whammy yesterday of news, which has certainly hurt the markets, and unpredictability as well, which we know the markets don't like, has certainly not helped the situation. So the geopolitical catalyst at the moment really is waiting and seeing on our hands what is going to happen next. Now, my situation with oil is, in a bit of a predicament in terms of, do I add more to the current situation? That is something I need to obviously weigh out, whether I buy now at 115 or maybe wait a bit until it hits 120 and then short the price. I still believe that oil will spike to a certain price and come back down as soon as this conflict is sorted or goes into some kind of peace process, and that the Strait of Hormuz is obviously opened up. Now, whether that's military movements or whether that will happen on the diplomatic talks, that is, anybody's guess at this stage, really. So all this is basically hurting the inflation, moving inflation up. The Fed's obviously now in a predicament where, as before, the oil situation wasn't factored in. Now it has, so now they have to be hawkish. Now, the interest rate cut is looking like it will only be one this year, in 2026, towards the end of this year, instead of the two that the markets were expected. So again, the market don't like that, because obviously, an interest cut is good for everybody in terms of, loans and cheap borrowing, and it seems at this moment that that is not going to happen. Personally, I don't think inflation is a bad thing. I think that 2% inflation is a very hard target to reach, especially the way the world is at the moment. The world globally has changed dramatically in the last 20, 30 years. Unemployment is still relatively quite low. Yes, there is the AI threat coming up. I mean, I could be there all day long really explaining what maybe or maybe not. Now, I'm sure enough YouTubers do speculate to accumulate and like big headlines. But at this moment, I'm trying to keep myself focused on what is going to happen from day to day. So we shall see what happens on the next 24 hours and where things are. Now, let's go back quickly to my position at the moment. Crude oil at the moment is well in the red, as I mentioned, and I'm pretty much down by quite a bit of cash at the moment, which is expected when obviously you bought in at 92 and 102. So I just need to weigh out what will happen. Now, looking at the analysis of the chart at the moment, it's looking like the 30 minutes, the buying has subsided on the hour chart as well. But the one I've got to look at probably most at the moment, because I'm buying on a day-to-day more than a weekly chart, as I do with my stocks. Obviously, at the moment, as you see there from my little yellow arrows, that's where I bought in. I am being beaten down. Now, my prediction is that it will probably spike up to 120, pretty further retaliations from both sides. I think the Americans will obviously talk to the Israelis about not hitting any further strategic oil places in refineries in Iran, because obviously that will then retaliate against some of the Middle East neighbors, which obviously could further escalate the situation. So my guess is that that will hopefully stop for a while, and then we'll get back to some kind of normality. So I will let you know if I do add to that position for now. And again, I will mull this over. In terms of the actual markets this morning, very flat. US 30, NASDAQ, both very flat, thankfully, at the moment. My portfolio hasn't changed much, apart obviously from a retreat back from S&P Global. Adobe's retreated to 245, so that's obviously hurt my portfolio a bit. And I certainly have lost on paper about £800 to £1,000 this morning from yesterday on my account value. So clearly my margins are being slightly squeezed, obviously, because my margin will get squeezed as I'm buying stock against my margins. Far away from being squeezed out, but still, I may well top up my account at some stage just to go through the pain of this situation. If you've got any comments, any questions on this subject at the moment, please do make comments and get back to me. I'm happy to answer any questions I can help. I hope this was a good little recap from you guys. It's certainly been a little bit ups and downs. Not always pleasant when you're a retail investor sitting there watching your money hovering down, but you've also got to think of the bigger picture and sit tight and wait for this to be over. I don't think, as I said, this conflict will go on forever. I'm hoping not anyway, for the sake of the world in general, but also for my own portfolio, and I'm sure for yours as well. So don't panic, stay cool, stay strong, and let's see what happens. I am going to have a few more hours of work. I'm going to do a couple of hours and clear my head in a little 9 golf with my girlfriend for a couple of hours as it's sunny here in London, and then I'll be back at work. So if anything else happens of any issue, I'll be there. I've got another drop for an analysis on a stock that I own, S&P Global, and why I bought in and why it should be a buy. Please do your due diligence, obviously, but that will drop probably within the next 24 hours. So from Trader72, please subscribe and like. I will see you soon. Have a great day. Take care and be careful with those margins. Bye-bye.